Okay, so today we will continue our discussion on labor supply, and the last class we learned about the decisions of the individuals on whether to work or not and how many hours to work, and using those decisions we can draw this type of individual labor supply curve for each person, and then when we add up each individual's labor supply behaviors, then we can get the market labor supply curve. Okay, this is the last diagram that we have studied last week. Now let's move on to let's continue our discussion on this. Okay, so with the labor supply curve, obviously we can have the concept of labor supply elasticity, right? So elasticity, as you know very well, probably by this stage of your study, the elasticity is just a percentage change in something with respect to percentage change in other things. Okay, so labor supply elasticity is obviously that with respect to wage is percentage change in hours of work divided by percentage change in the wage rate. Okay, so we can define it for individual or we can define it for the whole market. So as the elasticity, this is just the common concept of elasticity applied to labor supply behavior with respect to wage. So in mathematical terms, we can use this, right? Change of H divided by H and change of W divided by W. Or we can write this way. Okay? So it's just that it's just nothing special about this. Okay, so we can define whether it's inelastic, elastic using 1, okay, as the threshold. If the elasticity is less than 1, we say the labor supply is inelastic. If it is greater than 1, we can say it's elastic. Okay? And labor supply elasticity with respect to wage can be positive or negative, right? Because when the wage rate goes up, then labor supply or hours of work may increase or decrease, right? So when the wages go up, hours of work will decrease due to what effect? What effect? It's either substitution or income. So wage goes up, then by what effect work hour should increase? What effect? Which one? Substitution effect, okay, and decrease by income effect, okay. So when we combine them, okay, we get the final results. So as you can see, that if the substitution effect dominates the income effect, okay, wage goes up, the working hour will increase. Wage goes down, working hour will decrease. Okay, so when the substitution effect dominates, it should be the elasticity should be positive. If the income effect dominates, the opposite, okay, elasticity should be negative. Okay, so if we know the elasticity, then we can see whether substitution effect is greater or income effect is greater. Okay, so it could be positive or negative. Okay, now, how big is the elasticity? Okay, that has been the question of many study, okay, in labor economics. So you can actually read about this in the textbook in section 2-8. Okay. So estimates of the labor supply elasticity. So this one, actually, if you know, it requires some knowledge of econometrics, but it's not mathematical. It just explains the important study results. Okay, so if you're interested in this type of study, you should read it. Actually, it's very, very informative. Okay. So when the economists look at the labor supply elasticity, they usually look at separately for men and for women. Okay, because male and female labor supplies situation is quite different. For prime-aged male workers, prime-aged means that the age group that are expected to work most of the time. So it's like between, it depends on how you define it, but it differs from one research to another research, but it's usually like between 30 and 50, or 30 and 45, or 30 and 55. These are the age groups that we call prime-aged male workers. Okay, basically it means that these people are expected to work full-time. Okay, with a few exceptions. So in many countries, these male workers generally participate in labor market over 90%, of them. Okay, so what they found out is that these workers' labor supply is quite inelastic, okay, as you expect, which means that they do not change their work hours much with respect to wage rate change. Okay, wage rate goes up, it may go up, then these people may work more or work less, but actually it turns out that their change is quite small. When the wage drops, the same thing. Okay. Anyway, so there are many different studies that try to estimate what this number is. Then according to our textbook, the consensus is about minus 0.1. Okay, so it's negative sign. So which effect is greater? Substitution or income? Income effect seems to be a little bigger than the income effect. Income effect seems to be a little bigger than the substitution effect. Okay, so it's like a 0.1 minus 0.2. But anyway, as it tells us that it's a small number, it's very close to 0. Okay, so it's not that wrong to say that it's approximately 0. So they don't change much. Okay, so it's for annual hours of work. But actually, the textbook talks about that it is not that easy to find out the elasticity of labor supply for people, because there are a lot of problems when you try to think about it. Let's say, in the very basic level, finding labor supply elasticity is just looking at the data. Okay, what we have. In one hand, we have wage data. On the other hand, we have work hour data. Okay, and then we just figure out using the concept of elasticity. We try to estimate it. Okay, so let's say for a person, we see the change in the wage rate. We see the change in the hours of work. So we can actually calculate. Okay, so at the very basic level, what you need is very good wage data, very good work hour data. Okay, so then it seems that it is straightforward to estimate elasticity, but it turns out that it is not that easy. Why? First thing is that there are a lot of problems in the measurement. How do you get those wage data and hours of work data? Okay, so one way of doing it is to collect the data from the employers. Okay, so you do a survey of the companies and then ask about their employees, that how much they are paid and how many hours they work. Okay, and the other way is to collect data from whom? So one way of doing it is to collect the data from the employer. And the other way of doing it should be from the employees. Okay, from the workers themselves. How much are you paid? How many hours do you work? Okay, so there are actually both ways of doing it, and both ways are actually used. Okay, so how do you? Which one would you like to use? I mean, depends. So it is likely that if you have data from the employer, it's likely to be probably more accurate. In the sense that they they have all this record. They should have some record, okay? And obviously that payment record, they should have them, okay? So it seems to be more accurate, but the thing is that it's not that comprehensive in coverage, meaning that if the workers work for, let's say, very small companies, let's say, okay, 1 or 2 workers for a restaurant or something, these, very small companies are not likely to be surveyed much, okay? So if you want to have, let's say, more extensive information on, let's say, the large group of people, probably it's better to use, the self-reported data by the workers. But as you can see, that self-reported data may have a lot of problems. When you ask somebody, how much are you paid? Okay? They may or may not give you an accurate answer. How many hours do you work? They may or may not give you an accurate answer, because probably that they just don't remember much. Or they probably don't have like a fixed hours of work. It changes over time, those kind of things. So it is difficult to get very accurate information, okay, on this. There are some problems. I mean, there are problems that I can talk about. But let's say that measurement errors do exist. That is a problem. Even without the measurement errors, there is a problem of definition of hours of work. How do you define it? Is it weekly hours, or is it monthly hours, or is it yearly hours? No. So if you think about it, weekly hours, how many hours do you work? Have you worked last week? One way of asking is how many hours have you worked last week? Or they can ask how many hours do you usually work in a week? Those kind of things. Okay? Both ways of doing it is used. Or monthly hours, or yearly hours. What do you want to use? Obviously, that weekly hours changes quite. It can vary from week to week. For example, if you ask them during, let's say, summer, lots of people take vacations. So if you look at them, their weekly hours maybe seems very small. Okay, so it depends on the season of the year, those kind of things. So yearly and monthly, weekly. So depending on which hour do you use, you may get different answers. Okay. So it seems that the shorter the period, the more inelastic the labor supply. Okay. And another thing is that there is a problem of observation of wage. Okay. So let's say, we ask a question that, what is the labor supply elasticity of Korean men? Okay, prime-aged men. Okay, and it seems that if we have a bunch of data of Korean men working, then we can, get the answers. But there is a problem that some people do not work at all. Okay, for them, what is their labor supply elasticity? What is it? Is it 0, or infinite, or negative infinite? What is it? If you don't work, obviously, we don't have the information about the wage and hours of work, right? So neither information is available. But does it mean that this elasticity for these group of people is it what number? Is it 0 or what? Actually, the answer is what? What is the answer? The answer should be that we don't know, right? So we just simply don't know. We simply don't have any information about their elasticity. Okay? So quite often we exclude them, okay, in our study. Is it okay to exclude them? And probably that if they are a very small portion of people, probably it's okay. But if it's a substantial portion of people not working, then that can be a problem. Okay? So for men, it is actually a smaller issue, because a lot of prime-age males are generally, the more than 90% of them do work. So it doesn't seem to be a big problem. But if we, let's say, more interested in women, it can be a big problem, because it can be quite a substantial portion of people are not working. We just simply exclude them. Okay? It does not give us the accurate information about the elasticity of labor supply. Okay? So this elasticity of labor supply is not complete. Okay? Another thing is that there's interesting thing about the non-labor income. Okay? So in our labor supply model, people do respond to the non-labor income. You know, when their non-labor income goes up, labor supply decrease or increase? Decrease, right? And when the non-labor income falls, then labor supply will increase. Okay? So if you're interested in how people respond to wage change, then what we need to do is to somehow control for their non-wage, non-labor income. Okay? If, for example, wage changes and at the same time non-labor income changes, then we cannot actually have an accurate way of knowing the labor supply elasticity with respect to wage. Okay? Somehow the wage should change independently of non-labor income. Then we can get the accurate information. But there is a problem with the non-labor income because when you talk about the non-labor income, we say that non-labor income is some type of like returns to investment, returns to, let's say, property from rent from a property or dividends, whatever. Okay. So what are these non-labor income? These non-labor income for most people, it does not fall from the sky, right? Usually it is actually a savings, right? So this is basically what people saved over their lifetime. And usually those sources of savings are from their work, right? Unless you are born with lots of money, okay? Usually people do save, okay, from their labor income. So what does it mean? In general, actually when you look at the data, the people with high wage generally have high non-labor income. Why? Because they could have saved lots of money while they are young, let's say. Okay? And then people with low wages generally do not have much non-labor income. They don't have property. They don't have any other financial assets. Okay? So what it means is that generally high wage usually linked with high non-labor income. Low wage generally linked with low non-labor income. So it turns out it is difficult to separate the effect of wage from effect of non-labor income, right? So high wage group and low wage group. So these two are non-labor income and wages are actually in general it's linked in the actual data. When you think of the theory, we did not think that they are linked. Okay, they are independent in our theory, but in reality, it's not independent. Okay, usually it is closely linked. Okay, so if you actually look at the data, then it can be a problem. So it is a difficult task actually. To do it very well is quite difficult. But anyway, there is no, I would say that there is no disagreement to the argument that male labor supply elasticity is very low. Okay, and yeah, it seems to be true that when we look at our actual, situation. Okay, think of your fathers or your friends working. Their work hours do not change much. Okay. Now, how about the women? We talked about men. How about the women? Women's case is much more interesting because women's behavior turns out to be quite different. And when you look at the cross-country difference, there is a substantial variations in the participation rate. So it's in the textbook 2-4. So like page 50. Okay. So there's a lot of variation. I said that Korea is one of the countries that have lower participation rate. Another thing is that what is interesting about the labor supply of women is that in most countries, over time, their labor supply has increased. Historically, it was very low, And it has become clear. So what are the reasons? What labor economists have studied about this phenomenon, and then what can explain? And theoretically, we can actually have pretty good idea. One must be simply the wage, right? Think of the theory of reservation wage. What is it? When the wage goes up, then the group of people are more likely to participate. Okay? So over time, female labor force participation has increased. So behind it, there must be an increase of female wage. Okay? So that is not that difficult thing. So for example, like this is the percentage change in wage. This is from the textbook. This shows the percentage change of wage, and this is the growth rate of female participation. So this is the figure 2-13 on page 51. Okay. So what is it? Yeah, this is between 1960 and 1980. Okay, so 20-year period. So this shows the female percent change in the female wage. For example, United States, it's very low change, only about 2% increase. For Netherlands, it's pretty high, 8% increase. Okay, and this one shows the growth rate of female participation. Okay, and the theory tells us that in the countries where the female wage has grew faster, their participation rate should grow faster. Okay, and as you can see that it's very positive relationship, strong positive relationship. So countries where there has been substantial increase in female wage generally experience a substantial increase in female labor force participation. Countries where that wages change is small, then the change in the growth participation has been small. Okay? So as you can see that this is the relationship. If you look at Korean data, I didn't show the Korean data. If you look at Korean data, if you look at the percentage of female wage to male wage, okay, and if you look at Korea's historical data, it has been very low. In early 1980s, it was like below 50%. Okay, and it has went up to around 70%. Okay. Over time, then also the female participation has increased. Okay, another very important source of another very important reason why women's participation rate has increased is the fertility rate, because raising a child it's a huge thing for a family, and traditionally the women dedicate more time to raising a child. So obviously, when you have lots of kids, it's difficult to find time to work other than raising children. But if you have smaller number of children, then it's easier. Okay, so decline of fertility rate has been pointed out as very important reason. And if you look at Korean data, this is a labor force participation rate of 25 to 29. Okay, so young women. Okay, and then this is the total fertility rate. And total fertility rate is some type of statistical indicator of the fertility, the children born to a woman for a whole lifetime. But anyway, so this is basically shows the fertility rate. So as you can see that in Korea's case, fertility rate has decreased pretty drastically. In 1980, it was 2.7, 2.8. Okay, so in early 1980s, having 3 kids were kind of norm. Okay, now it's around 1 actually, a little more than 1. Okay, so it's now the norm seems to be 1 child. Okay, how many of you are only child in your family? Raise your hand. Oh, not that many. How many of you have only one sibling? I have only one sibling. Oh, so 2 seems to be the dominant number. It was when you guys were born? Around what? Around 1990 something, right? Is it? 1995, probably. Around 1995. So as you can see that total fertility rate at the time was 1.7 or something. See, so on average, it's close to. Okay? So, you can see that 2 seems to be norm around your age group. But for, let's say, very young age group, let's say, the primary school children in Korea now, a lot of them are probably, majority of them are only children, only child. So anyway, so it dropped, and over time, fertility rate has, the participation has increased. Okay? And we should be careful that actually it's not correct to say that participation rate has increased because fertility rate has decreased. It can be the other way, So women wants to spend more time in the labor market, and then they decide to have smaller number of children. It is also possible. So it could be both ways. Obviously, in 1980s, let's say, it was difficult to control the number of kids, right? Because contraceptive, that technology was not that very well developed. Actually, it was well developed by that time, but probably was not that used much. But if you look at, let's say, advanced countries, 1960s were very important year for women because contraceptives was very well developed by that time, and then then the number of children has dropped, and a lot of women tend to go out to work. Okay. But anyway, in most countries, it's very closely linked: increase of labor force participation and decrease of fertility. Okay. Especially if you look at developing countries, low-income countries, generally that women's participation and decline in fertility, it goes together usually. So that was quite important reason. Okay, so contraceptives, use of contraceptives and development of contraceptive technology was very important reason for participation, increase in participation of women. And household production, it saves time, okay, obviously. If you have washing machine and if you try to wash all your clothes using your hands, probably it takes whole day to do it. If you have washing machine, then I love the timer function of washing machine. You don't have to actually do anything, just push the buttons. Okay, that saves lots of time, obviously. And technology advancement that allows work at home. So some women now, or even some men actually, can work at home. Okay, using computers and internet and all those stuff. I do work at home sometimes. Okay. And social and cultural changes. Okay, so this is also quite important. Okay, so 1960s, 70s, 80s, the social norm for women was not to work. Okay, so it is interesting if you look at, let's say, for example, that very old show, old drama, old show of, let's say, American culture in 1960s. Women were not working. Okay, during that time, respectable women were supposed to be homemakers. Okay, so if you do not work, it's not respect. If you work, it's considered to be not that respectable. So if you look at 1960s, if you look at the American home shows in 1960s, if you look at some sitcoms, okay, comedies, then usually the women who work are generally portrayed as some type of weirdo women, strange, like a funny character. Okay, and then the respectable character of women in the shows are that they do not work. But it changed a lot, obviously. In Korea's case, it has changed a lot now. Right? So that is also quite important. So secular increase in the women's participation rates, it has been very important phenomenon. okay, in most countries. Okay. So that is quite important an observation for women. Now, another thing is that how about the labor supply elasticity of women? Okay. So what they found out is that in most studies, it seems that substitution effect is bigger than the income effect, which means for women, when the wage goes up, they tend to work more. The wages go down, they tend to work less. Okay? So participation of women, especially the participation of women, whether to work or not, is very responsive to market wage. When the market wage for women go up, then participation tend to increase and market wage do not go up, falls, and participation tends to decrease. But once you are among working women who are already working, then hours of work are not very responsive. So hours are inelastic. Okay, participation seems to be elastic, but hours inelastic. Okay. And there is a linkage between husband's wage and wife's wage. Okay, so husband's wage go up, then wife's wage, hours of work of married women tend to decrease. It seems to be what effect? It seems to be the work of what effect? Income effect. It seems to be a work of income effect, right? So the husband and wife, they live together, and if the husband's income increase, then wife sees it as change in the non-labor income, for example. Then leisure is a normal good, so women are less likely to work or work less. Okay. But it seems that the other way around does not work. Okay. So wife's wage go up, it does not change much of husband's hours. Right? But there may be some type of social norm or something. Okay. But anyway, so it's an interesting observation. There is a linkage between husband and wife's wage rates and their labor supply behavior. There is a very interesting study about this, whether the husband and wife wants to retire at the same time. Okay, let's say think of older couple, and let's say the husband or wife, let's say tries to decide whether to retire from work or not, and whether they do it together or whether they do it separately. It's another also interesting research topic. Okay, questions? Okay, I think in the Korean labor market, actually women's labor supply behavior is not that very well studied. So we should do more to find out what's special about Korean women. Okay, why their participation is so low and those kind of things. Okay, now so far we have covered the basics of labor supply. Okay, using work leisure choice model. Okay, so we have studied the very standard type of work leisure choice model. Now let's do a little bit of applications and extend our basic model. Okay, the important application parts are what are the effects of welfare benefits on labor supply, and what is the effects of earned income tax credit. I will talk about what it means later. And taxes. Okay, so these three are generally we look at like government policies. Okay, those two are government transfers, and this is tax, obviously. So transfer is what's given to people. Tax is what's collected from the people. And we see what's the effect of overtime premium and the effect of fixed costs of working. And we'll talk about it later, what it means, and then life cycle and the business cycle. Okay, so at first we will go through these effects of government policies, government programs, and then a little bit of extension of the model. Okay, welfare benefits. Okay, welfare benefits. I mean, programs of welfare benefits can be quite complex. You can have a lot of rules. But anyway, at the very basic, the welfare program as cash transfer program is simple. If you qualify, okay, and generally it's for low-income people. Let's say your income is low enough, then you get money from the government. That's a simple way of thinking about it. Okay? So low enough, you get the money, and if your income is high or above some threshold, okay, you don't get anything, or you may get reduced amount. Okay, so that is the generic welfare program you think about. For example, something like this: $100 benefit if her work hour is 0, which means that her income is 0. Okay, so if we look at how much income they make, and if their income is none, we give that person $100. Okay, then let's say that if the person earns their own income, then we do not give $100. We deduct it because this person has his or her own income. So let's say if the person makes $50, we give her 50 only. Okay, and if she makes like 70, we give her 30. Okay, if she makes like 20, we give her 80. Okay, that makes sense. So which means that at any point, at any income level of his or her own, she can spend $100 at least, right? And if she earns more than 100, the government does not give anything. Okay, her income is high enough, $100 is a threshold. Get that? So the idea is, so let's say the transfer or welfare benefits, or we should say benefit amount is just simple, $100 minus, right, own income. And it's 0 if own income exceeds 100 or 100 or no less than $100. Now think of from the viewpoint of individual. Okay, think of a person whose hourly wage rate is $10. So if she works for an hour, she will get $10. She can get $10. Okay. Now, if she doesn't work at all, her income is how much? According to this welfare benefit, her income, including welfare benefit, should be $100, right? If she works for 1 hour, what's her income? What's her income? What's the total income? It's still $100. Why? Because she earns 110, but government gives out only 90. Okay, so by working for 1 hour, another hour, okay, how much income she got from it? Okay, with 1 hour work, how much additional income did she get? She get 0, nothing. Okay. Then what happened to that $10? She earned 10, but when she go back home and then look at the pocket, okay, she still has only 100. Okay, yesterday she didn't work at all. She got 100. Now I worked 1 hour. I have still 100. What happened to that 10? What happened to that 10? Who got it? Who got the 10? It's the what? It's me? No, it's not me. Who is it? It's government's. It's in the government's, treasury. Why? Because the government basically saves $10. Okay? So one way of interpreting is that I give you $100 as like yesterday, but you have to pay me the tax of $10. Okay? So at the end, you have 90, right? Net. Well, it's like you get $100, but you pay me the tax. No? I collect your income as tax. Okay? That's another way of saying that the government gives, the welfare benefits minus her own income, because her own income is used to save the welfare benefits. It basically increases the government treasury, right? So government has $10, saved money in their pocket. Okay, so that is, we call it the implicit tax. Okay, that's why we use the term implicit tax. It's not explicitly, it's not taxed, but implicitly, it's just a tax. It's just another form of a tax. Okay, got it? And the tax rate is what percent? 100%. She gives everything as tax to the government. If she earns 20, the government collects 20. If she earns 50, the government collects 50 in the form of reduced benefit. Okay? But anyway, at the end, it's the same thing. The government just saves 50, or the government gives a 100, but get the 50 back. Basically, the same thing. Okay? Get it? Okay? That's why we call it 100% implicit tax. From the individual's point of view, that changes the wage rate, after-tax wage rate. Because what individuals care about is not how much I earn, okay, before tax. What is important is after tax, how much I can spend, right? So after tax is what individuals care, right? Okay, what is the wage rate for this individual? Is this $10? Is it $10? After tax, it is $0. Why? Because it's 100% tax. I earn 10. My government takes away my $10 as implicit tax because it's 100% tax rate. I have nothing at the end. I work 1 hour, no change in my income. Work for 5 hours, still no change in my income, right? Work 10 hours, still no change in my income. What does it mean? I just wasted, in a way, my 10 hours by earning nothing, right? After tax. So that changes the wage rate for that person to 0, right? Okay? So after tax wage rate is obviously should be something like this. After tax wage should be before tax wage times 1 minus tax rate. Okay? If tax rate is 0.5, then after tax wage rate is just 50% of the before tax. Okay? And if it's 1, like a 100% tax, 0. Get it? So if she had like her before tax wage rate was 10, but since implicit tax is 1, her after tax wage is 0. Okay? So she finds out that working doesn't change anything, okay, in terms of income and consumption. So intuitively, how many hours does this person want to work? 0, 5, 10, what? Should be 0, right? Because working does not change in consumption at all. What happens? It just reduces her leisure hour. So she becomes unhappy because leisure gives this person utility, the pleasure. Now I'm less happy and no change in my consumption. So I'm very unhappy. So I don't want to do it. Okay? That should be intuitively the answer, right? So if you look at this diagram, now let's look at the diagram. This is before any welfare. Okay? So this is a situation before welfare program. Now with welfare, what happens? Okay, what happens to her budget constraint is that if her leisure choice is T, her income would be 100. Her consumption would be 100 because she spends everything. Okay? And if leisure hour is less than T, okay, well, let's say it's $10 per hour. So if she works, let's say 5 hours, her earnings is 50, but her benefit is only 50. So her income is still 100, which means what? It's when you draw a budget line, it is just flat line. Okay? Get it? So even when she reduces her her leisure hours or work more, income doesn't change. Before, if she works, then her income increases. Now it does not. Well, obviously, if she earns more than 100, it doesn't matter because she's not gonna be the beneficiary. Okay. So if she works, let's say, 12 hours, she earns 120. In that case, it doesn't matter. Her wage rate is $10. It's $10 is $10. Okay. So we have what? So unlike the first one, the second one we have. What we have is basically two parts, right? One is flat part, the other one is this original one. Okay, so it seems a little more complicated, but anyway, the principle is the same. Given the budget line, given the budget constraint, she will try to optimize. What is the optimal choice? Is it E1? It's not obviously a E1, right? Because if she doesn't work at all like this, she will get to the level of U2, which is obviously higher than U1. So she wants it. Okay? And her choice would be not working at all. Okay? It's not 5 hours. It just stop working altogether. And interestingly is that before the welfare, actually she was earning more than $100. She was earning little more than 100. Let's say she was earning 110. Her income is actually lower now, but she's happier because her leisure hour has increased drastically. So, in spite of a little drop in the income, she wants just to be in the welfare. Okay? Get it? And in this type of program, anyone in the welfare would be the person doesn't work at all. Okay, there will be no working beneficiary. All the beneficiaries must be non-workers in this program because that's obviously the best choice for the individuals. Okay, so it does not necessarily mean that everybody will be on welfare in this economy because if you think of this type of individual who's working more and earning, let's say, higher wages, okay, for this type of people, choosing to be in welfare will be reducing the utility level. So for these people, no change. Okay. So creating welfare program, obviously what happens? It gives an incentive to low-income individuals, okay, to reduce their work. In this case, stop working altogether. Yeah, if the person was earning less than $100, that is obvious. If you're earning 50, okay, then with welfare, I would just stop working and collect 100. Okay? But even for those people who are earning a little more than 100. Still, these people will just stop working and collect 100. Get it? So this type of welfare program, what? It creates an incentive to low-income individuals stop working at all. Okay. Okay, now, it seems to be a bad policy because what happens here is this. If you give out the money like this, then these group of people will not move away from this non-working position. So these people will be on welfare basically forever. Okay? I don't have any money. Okay? collect 100. And also, I do not have any incentive to out of it. Okay? So it creates a group of people who on welfare just indefinitely. And if that size is, let's say, substantial enough, it can be a problem, okay, to the society. So, in a way, every government tries to reduce this problem. Okay? So over-dependence on welfare can be a big problem. So how do we do it? Okay. One way of doing it is that if you notice that the reason why these people just stop working is because the tax rate, implicit tax rate, is just too high. It doesn't make any sense to work because your wage rate is basically zero. Okay? Nobody wants to work for nothing. So how do you do it? One way of doing it is to change the implicit tax rate. Okay, for example, you just lower it. Lower from 100 to, let's say, 50. So how does it work? Okay, it works this way, right? If you're on 50, the government will give not 50, but how much? If its implicit tax is 50%, if this person earns $50, the government gives not 50, but 75, because the government collects a tax on the 50% of the income. So 25 is collected by the government. So the rest of it, $75, is given to the worker. So this worker will get, at the end, have $125. Right? Okay, makes sense? Or in this case, it's 500, but anyway, if we use $100 as the example. So in that case, what happens to after-tax wage rate? It's a before-tax wage rate times 0.5. Okay? So if the before tax was $10 per hour, after tax is $5 per hour. Okay, in diagram, in this case, let's say think of an individual whose wage rate was 10. Okay? And let's say 500. If she doesn't work at all, she gets 500. Okay, this is from taxable. Since it's the original budget line, since implicit tax rate is $5, her budget line will change from this one to $5 line. Okay, so this is this darker one is this $5 line. Okay. So after welfare, her budget line changes from FPE to F, this point, there should be something, G. Get it? Why? Because if the person is earning more than this point, there should be no welfare benefit. Okay? The person should not have lower income because of welfare. Okay? So let's say we call this point K. Okay, let's say this is the K, point K. Okay, the point these two lines meet. Let's say this is K. Then before the welfare, the budget line was FKPE. Now it's FKRG. Get it? Okay. And this is not flat because it's not 100%. It's just $50, a $5 line. Questions? Got it? Okay. Okay, think of the person not before the welfare. Optimal choice was P. With welfare, what is the optimal choice? What is the optimal choice? Q or R? R, right? R is on the new budget line. Okay. Okay, now what happens here is that let's look at the sufficient and income effect. To look at the sufficient income effect, we draw a hypothetical budget line that is parallel to the old one but touches the new indifference curve. That line is DD. DD is the hypothetical budget line. So if nothing changed, if no change in the wage rate, okay, if there has been no implicit tax, her budget line would be DD. So P to Q is what effect? Income effect. Okay? So by income effect, her leisure hour increase or decrease? P to Q, her leisure hour increase. Okay? Labor supply decrease. Okay? Moving to the right. Oh, this says hours of work? No, cannot be. It should be hours of, yeah, it's hours of work in a way that hours of work this way, hours of work. Well, let's say this should be the hours of leisure. Okay? That makes more sense. Hours of leisure. Oh, okay. Yeah, in page 57 on textbook, it says correctly hours of leisure. Oh, why does it say hours of work? Yeah, when they make the PowerPoint slide, they made just a mistake. Hours of leisure. Okay, this should be hours of leisure. Okay, got it? So P to Q, by income effect, leisure increases or work less. So where does the income effect come from? Basically, with welfare, this person's income gonna be higher. It cannot be lower. Okay? So that's the source of income effect. Q to R, what effect? Substitution effect. Work more or work less? Work more or less? Work less, right? Because increase of hours of leisure increases. Work less. Moving to the right, work less. Moving to the left, work more. Okay, Q to R, work less. So labor supply decreases. This is different from the change in the wage rate, right? We learned in that case, income and substitution effect has opposite, right? Two effects have opposite directions. In this case, same direction, increase of leisure or reduction of hours of work. What's happening? What's the source of change? What's the source of substitution effect? Q to R. The substitution effect happens because wage rate changes, right? Okay. How did it change? It changed from $10, right? So DD is $10 line to how much? $5. So wage decreased. So price of leisure is cheaper. So substitution effect, work less or consume more leisure. Price of leisure is lower. So implicit tax makes substitution effect to increase leisure, not decrease leisure, increase leisure. Get it? Okay? So, in summary, what happens? This welfare program has two consequences. One, it increases income, simply. The income cannot be lower because of welfare program. Okay? So income goes up. Second, because of implicit tax, her tax rate will be, wage rate will be lower. So both things happen. Income increases and price of leisure decreases. And by both effects, labor supply will decrease. Get it? Make sense? Okay. So what is the effect of, in summary, what is the effect of welfare program on labor supply? It will decrease labor supply. Okay? There's only one direction. People do not work more because of welfare. What happens? People do work less if they are given welfare benefit. You may say that, this welfare program is just too simple. We can make, we can tweak welfare program to have not to have this type of effect. We may have a welfare program that makes people to work more, in some way, and give money at the same time. If there is such program, it's not on welfare actually. It's some type of different program. Okay, if you want to know more about different programs, you should take another of my course. Okay, social policies and programs, and that one I will teach more. But anyway, now think of the essence of welfare program. Welfare program in the essence is this: give money to low-income people, but we cannot give money forever, right? So at some point, this money should stop. Okay? If the person's income is high enough, we should stop paying. What does it mean? It means we should have implicit tax at the end. We should somehow decrease the payment of welfare benefit. If we do not decrease welfare benefit, then it means what? Everyone will get cash in the economy. Okay? Then we don't call it welfare. It's just what is it? What do you call it? I don't know. I don't know what you call it because we don't have such thing, right? The government does not simply give you money, everyone, right? It gives you money only when you qualify. This qualification generally means your income is low enough. So your income is low enough, then you have money. But if your income is high enough, we give you less money, which means what? We have tax. What does it mean? It means that your wage rate will be lower. Okay. So at the end, we have work reducing income effect and substitution effect. We just cannot avoid it. Right? I mean, you can try to tweak it, but at the end, you will realize, okay, it's just simply not avoidable. It's just a trade-off. Basically, it's an inherent trade-off of welfare. It gives economic security to low-income people. There's a positive side, right? So we have low-income people who struggle to meet their basic needs in their daily lives. So it seems to be good thing to give them some cash and some help in different ways to live lead a decent life. Okay, that's a positive thing. But there is no free lunch. Okay, what is the trade-off? Our trade-off is that this program generally creates a disincentive from working. So these people are likely to work less or stop working altogether. So that means what? At the end, somebody should subsidize these people's lives. Okay? So that generally from our tax. Okay, taxpayers' money will be spent on someone else's welfare. Okay? So there are trade-offs. There are always a trade-off. There is no such thing like free lunch. So these are trade-offs. So whether the society accepts it or not, it's just society's decision. Okay? You want to subsidize people's livelihood by using your tax money. If you're okay with it, we go ahead. If you do not like it, then we will have lots of discussions about it. Okay? Get it? Makes sense? Okay? So it's with any other policy, it has trade-offs. Okay. Now, so welfare program seems to be, in a way, that has lots of negative side because people do work less. So the government has searched for alternatives, actually, many governments. And it seems that nowadays that very popular alternative to welfare program like the ones that we studied is called earned income tax credit. What is earned income tax credit? Well, earned income tax credit is the earnings subsidy. What is an earnings subsidy? This subsidized earnings, which means that when you have low earnings, so you work, but your work does not give you enough income, then this EITC will give you subsidy. You get additional money from the government. But because it's an earning subsidy, if you do not have any earnings, you don't get anything. Okay? So it gives money only to people who do work. That's EITC. Okay? So that's an alternative to welfare program. Okay? Get it? So this is different program from welfare. Okay? So in general, the countries have both programs. Not in general. Many countries who do have EITC has two programs, both programs. Welfare programs and EITC programs. Okay? So welfare programs commonly used to people who cannot work or for some reason who do not work and very low income. EITC is used to people who do work but on not enough income. Okay, there's two programs usually exist. In Korea's case, we do have both programs. So EITC is earning subsidy program that provides low-income earners with cash tied to the amount of earnings. In general, your earnings are higher, then your subsidy you get is higher. But it cannot give you the subsidy forever. So at some point, they will reduce it. Okay? In the US, actually, the EITC is big. It was first introduced in 1975, and by now it is the largest income tax transfer program for low-income individuals. So if you look at the textbook, actually it talks about EITC. So EITC is bigger than welfare program in the US now. Okay, and then this in UK has a similar program, and I think other countries do have the similar program. In Korea, the EITC was first introduced in 2008. Okay, and we have EITC. In Korean, we call it 근로장려세제. Actually, it literally means the tax program that encourages people to work. Okay, but official English translation of this is EITC, on the income tax credit. So in Korean government calls this on the income tax credit because pretty much the same program as the US EITC. But we have different details, but the idea is the same. Okay, so eligibility conditions. As you look at the eligibility conditions, it just means that your income should be low. Okay, less than 13 million won, less than 20 million. So income should be low, and then your asset holdings should be low. Okay, so low income, low asset. Okay. And the household should not be a welfare program beneficiary. Okay, so you cannot get both. You can get only one. And you should be a citizen. And in Korea's case, what is interesting is that they just do not give only one single threshold for income. They have depending on the type of household, they have different thresholds, like single person household, single owner with the dependents, and two owners like this. So details a bit different, but the idea is basically the same. Your income is low enough. Then how much do they give you the amount? Okay, I will show you the diagram. It's easier. So this is the EITC subsidy amount. What is it? If your earnings increase, the subsidy increases. Okay? So if you earn more, you get more money from the government. But at some point, they should reduce it because they cannot give you subsidy forever. So at some point, it's going to be a flat amount. Even if you earn more, the subsidy will be flat. Okay? And then they start reducing it, less and less subsidy. And if you reach the maximum earnings, subsidy will stop. Okay? So this is how the EITC benefit is designed. So if your income is very low, if you work more, you actually get more money from the government. But your income is now high enough, then you will get less and less. And at some point, it will stop altogether. Okay? The US EITC program also has the same structure. Increase, flat, and decrease. Okay? In Korea's case, only difference is that we have different types of households. In the US, they have like a number of children, those kind of things. But anyway, the details are different, but the idea is the same. So what happens, okay? What happens here is that in terms of, budget constraint, this is before EITC. After EITC, if you earn nothing, you get no subsidy, so no change. Okay? But if you earn more, then you get subsidies, more and more subsidies. What does it mean? Your after tax wage rate will be, after transfer wage rate will be actually higher. Okay? So you earn more, then you get even more money from the government. So after transfer basically means that your after tax wage is higher. But at some point it's going to be flat. So flat means what? Your tax wage rate going to be no change because it's flat money. It's just a fixed amount of money, no change. And then later they will reduce the subsidy. So that means you earn more, your subsidy becomes smaller and smaller. So it is like collecting implicit tax. So wage rate gonna be lower. It's gonna be flatter. Okay. So at first this line steeper than original one, and then same slope, and then flatter slope. You get that? Okay. So it has interesting things. First, this group, for this low income group, their wage rate goes up. So what happens to their participation? Work more likely to work or less likely to work? More likely to work. Okay? And how about the working hours? Increase or decrease? Increase or decrease? It depends on substitution and income effect. Okay? If substitution effect is greater, work more. Income effect greater, work less. But since it's low income, substitution effect is likely to be greater. So they are likely to work more. How about flat part? Work more or less? Flat part, more or less? Substitution effect and income effect. There is income effect. What is a substitution effect? Substitution effect comes from change in the price of leisure, right? So this flat part, there is no change in the price of leisure, so that should be only income effect. So work less. Okay, work less. The leisure hour increase. How about this part? Wage is smaller. Work more or less? Work less or more? It depends on the effect, it seems, but how about the income effect? Work more or less? Work less because of the subsidy, this person will have higher income. So income effect, work less. Substitution effect, work less. Why? Because of implicit tax. Think about this one. This number 3, this part is just like a welfare. You are given money, but it decreases as your income increases. So this is like welfare. So welfare makes you work less. Okay, subsidy gives you higher income, but at the same time, because the subsidy will decrease as you work more, okay, it makes the implicit tax greater than 0. So less. Number 4 is obviously the person who worked here but now wants to be in the EITC program, work less. So as you can see that EITC program does not necessarily make everyone to work more. Basically, it has positive effects on very low income people, but if you go on a higher income group, the effect gets a little, little less desirable. I think we should stop here. Okay, this is the summary. We should stop here, and then next class we will do tax. Okay.